Okay, here we are. We are back at sheet 2. And where are we at? We did this one. We'll do sheet 2. And sheet 2 is talking about treasury stock. And this is stock that we buy back from the market when the stock is low and we think we can make a good deal, or when the stock is low and we want to pump up the price. And they're called required stocks or treasury stock. So, first of all, you have to remember treasury stock, the par for treasury stock is whatever you bought it for. So in this case, we reacquired common stock for $12 each. So its par becomes 12. So what accounts do I use? Well, I spent cash and I have created an account called treasury stock. So how much did I spend? I spent $600,000 on this. And so now I have set up my account, and now it's becoming very lucrative to sell them back, or to put them back on the market, so to speak. So we sold 31,000 for $15 each. Okay, so $15 is going to give us 31,000 times 15, or a total of $465,000 here. But this treasury stock, its cost is $12, and we sold it for $15. So we can pretty well tell you we're going to have paid-in capital from treasury stock. So 12 times 31,000 is 31,000 times 12. We should have had this done, huh? Is, drum roll please, 372,000. And the difference then becomes the paid-in capital. And that would be 465 minus the 372, which gives you a $93,000 difference. Same thing on this one. Again, treasury stock is at $12. We're selling it for $17. We're receiving cash of $204,000. And we've sold 12,000 at 12. So this is going to be 144,000. And then the difference is going to go into additional paid-in capital from treasury stock. Remember, we're keeping this separate. So those are the entries you would use for treasury stock. Always remember, whatever you buy it for becomes its par until it's totally gone. Let's move on to stockholders' equity. This is going to be sheet 3. Here, this is just a plug and chug. So I'm looking for preferred stock. How much did we have? If I come over here, preferred stock, I had 7,200,000. And that gets us started on our. And how much did we have in excess? We had 384,000. And then you're going to list the common stock, which is 10,880,000. I think I need another one. And how much excess is there from that? That's 420. And then we have paid-in capital from the sale of treasury stock right here, 340,000. It has to be added in. So now we can get the total of paid-in capital and all of the stock. So that is going to equal the total of this. So it's 18,424,000. Retained earnings from over here is 71,684,000. And that gets added to the 18 million. So this is a equity statement. And then we have treasury stock of 1,008,000 that will have to be deducted from this to get our stockholders' equity. And it's, like I said, a plug and chug, and it's literally reconciling all of the stocks and the additional paid-in capitals and reducing the treasury common stock. So, and I think we can get sheet 4 in, which is cash dividends. They're real easy. So we're going to declare it. We have our time for a record, a date record, and then we're going to pay it. To record the date, or to record when the dividends are declared and who will receive them, is this record, date of record. And there's really no entry of it. It's just notated when the original declaration is made. So what accounts do I need? Well, I know I'm paying dividends, and I know I'm not paying them out right now. So that actually means I'm going to have a payable listed on it. So that's my first entry. Now it comes time to pay it. I'm going to take it out of my payable, and I'm going to take it out of my cash. And that's how you pay dividends. Very slick, right? Okay, the next one up is stock dividend, and I think we better do a new video for that. That one may take a while.